folks. We got insider buying and institutional buying happening on Opendoor, giving a lift to the bullish sentiment that's already been building. We'll break down everything with the number one retail stock right now, Opendoor. Also, we'll break down some of the bigger macro news, including the S&P 500 shaking off Fed fears as we all anticipate a September rate cut. We'll also break down September seasonality and what it could tell us historically for what to expect in the market for this new month. We'll also break down Spirit Airlines declaring for bankruptcy yet again. All that and much more on this week's market prep video. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to like, subscribe, share with a buddy. Don't forget to follow us wherever you listen to podcasts. And now, folks, as always, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you want to support the channel, make sure to check the links in the description. Well, folks, happy Labor Day weekend. I hope everybody is getting the rest they deserve. We got football right around the corner. It's an exciting time of the year, and especially if you're an Opendoor right now, it's very exciting. Things are heating up. We got some news from the interim CEO and president, Shrisha last week on Thursday, that he made a purchase of Opendoor shares at the market. So let's kick it off with that. First of all, let's take a look at this tweet directly from Shrisha himself last week. He says, "We are all in on the long-term opportunity at Open. Actions speak louder than words. I'm personally buying more stock, and all members of our executive team have canceled their 10b5-1 selling plans." So this is great news to see. He purchased about 30,000 shares after the bell happened on Thursday, and his entire position now is over 4 million shares of Opendoor. So this is something that Eric Jackson and really the retail community had been asking for from Carrie Wheeler, even back when she was on board before she stepped down. One of the biggest complaints with Opendoor thus far has been that everyone on the board has been selling shares. No one's been buying shares. And so it's great to see Shrisha stepping up as the new interim CEO here in the short term and coming out and putting his money where his mouth is, buying shares of Opendoor. I think this is great news overall for the company to see the confidence coming from the inside. You love to see it. So let's take a look at this article that came out on Guru Focus, just kind of laying out more details of what happened. So Shrisha Radhakrishna acquires 30,000 shares of Opendoor Technologies on August 28th, 2025. Shrisha Radhakrishna, president of a branch Opendoor Technologies, purchased 30,000 shares following this transaction. The insider now holds a total of 4,280,000 shares in the company. The transaction details are available in the SEC filing. Opendoor Technologies is a company that operates a digital platform for residential real estate transactions. The insider's recent purchase is part of a broader trend observed over the past year, where Shrisha Radhakrishna has acquired a total 30,000 shares and sold none. In contrast, the overall insider transaction history for Opendoor Technologies shows 1 insider buy and 21 insider sells over the same period. So this is great to see, as the article, says there. We've had a lot of insiders that have been selling shares over the past year, and that, folks, does not show confidence in the company. That's been one of the biggest gripes from Eric Jackson regarding Opendoor and really their management team. So we love to see this, though. The fact that Shrisha is stepping out there and purchasing shares gave us a bit of a lift towards the end of the week before we headed into this Labor Day weekend. So we'll see what kind of momentum that could bring heading into next week. But I love the fact that he is saying that the entire board is canceling their selling plans as it relates to, whatever RSU shares that they may currently hold. So that's great to see. So speaking of Eric Jackson, let's jump into this tweet that he put out last week. He says, if they put Keith on the board, Keith Rabos, that is, he picks a killer CEO and they articulate the new strategy I've been advocating, this could end September at $60. Why wouldn't they? This is a massive tweet from Eric Jackson calling out potentially $60 in September. I know it sounds crazy, but given the short interest and all the momentum around this stock right now from a retail angle, and some of the institutional angles as well, which I'll get into here in a moment, theoretically it could happen. So Keith Rabos, as we've covered on the show before, he was a part of Opendoor at the beginning, stepped away to handle other things, other business ventures. And so Eric Jackson and really a lot of the retail community have been calling for him to come back to Opendoor, right? Come full circle and really support this company on the board as they look to take that next step into, AI ventures as it relates to this legacy industry being real estate. So I just thought that was a very interesting tweet that we got from Eric Jackson towards the end of last week. Now, what I want to do here is show a short clip from Eric Jackson. He was on Yahoo Finance last week, basically talking about the comparison between Opendoor and companies like Uber, right? One of the things Eric Jackson has been saying a lot lately is that Opendoor could very well be the Uber of real estate, right? He's also called it, the Carvana of real estate. He's made some of these other comparisons to these companies that really led the way into their respective industries that were a bit archaic, if you will, right, prior to their entry. And so really what he's saying here is that Opendoor could be that next company to kind of uplift a legacy industry, an archaic industry such as real estate, right? And that's of course what everyone is viewing for Opendoor in this iBuyer model, and partnering with real estate agents and bringing in some of the technology that they've tried to implement to really kind of flip 180 the real estate industry. So let's take a brief look here at the short clip from Eric Jackson on Yahoo Finance.
Real estate. It's just like Uber. It's the exact same playbook as Uber. You got to dominate the US first. You're going to have to go like heck against like local regulations to kind of beat back, the NAR and the kind of agents across the country who are going to fight to keep on to their 6% commission rate. But once you do that, you take it global, this can be the Uber of real estate.
Eric, I've been watching.
So, right there from Eric Jackson, like I was saying, he's essentially calling this the next Uber of real estate. And, we've seen what, Uber has been able to do in their industry, right? They've been very, very successful. And obviously the former CEO of Uber is one of the individuals that the retail community, including Eric Jackson and Anthony Pompliano, have really called out to be the next leader for Opendoor. So, we will see what happens on that front. Now, what I want to jump into, though, is some of the institutional action that we have seen on Opendoor of late. Very, very interesting. Some of the transactions that have been coming in, and then we'll jump into the charts to see what last week looked like and what we could be expecting for this week ahead. But I want to kick it off, first of all, with this tweet that came out from Mike Longterm on X. It says 13F filing, Weiss Asset Management initiated a large position on Opendoor with 9.6 million shares. That's very interesting. And then also we have this one as well. Breaking 13F filing, Cube Research and Technologies, a $28 billion fund, initiated a massive brand new position on Opendoor with 12.5 million shares. That is a massive, massive position there from that particular fund, and really just goes to show you have institutions even at these levels, right? Which, a lot of the bears have been saying this is highly overpriced at this point, especially after the run-up we've seen over the past couple months. Yet you have some institutions throwing down some pretty massive dollar amounts in order to get into Opendoor. So let's take a look here at Fentel.io. If you're familiar with the show, I'd love to reference the site just to get an idea of insider transactions, institutional transactions. And so what we're taking a look at here are 13F filings. What that is, if you're unfamiliar, these are basically institutions that manage assets over $100 million that have made a transaction in Opendoor in this example, right? So per SEC rules, they have to disclose that. And so if we take a look at some of the transactions that came up on August 14th, so a little while back now, about midway through the month, but this is where we can actually find some of these purchases that were happening. So if we take a look here, first of all, Cube Research and Technologies, there you go, right here. This is August 14th. And as you can tell here, over 12 million, about 12.5 million shares that they purchased into Opendoor. Again, showing some of that confidence. You love to see it. And they are not the only company that's buying up stock, folks. There are plenty of other businesses that have, either added to their position, right? Or they are putting on, brand new positions in Opendoor. And so the interesting thing to me when looking at this is the fact that, yes, you have the retail angle, right? You have retail getting in and, buying Opendoor, and it's nice to have that. But in addition, what you need to keep the momentum going is some of those larger whales, some of those larger funds. And what that does is it just adds to the overall bullish sentiment and confidence in the company. Here's the other one on August 14th, Weiss Asset Management, right? They have 9.6 million shares. Anytime you see a green bar here or a red bar, if you're on YouTube, that basically just means this is a company either opening a brand new position, or if it's in red, they are closing an existing position. Anything else on here are just changes in existing positions. So clearly there's a lot of action happening in Opendoor right now from an institutional level. And it's really great to see, because again, what it does is it shows that overall confidence that not only retail has. We know retail has it, but what we want to see is from an institutional level, who is getting in, right? Who is taking positions in this? I've talked about this before, but if you take a look at GameStop, AMC, back in 2021, they did not have nearly the same amount of institutional backing that Opendoor has right now. And we talked a couple weeks ago about how Warren Buffett is making purchases in not Opendoor, but in companies that are in the same industry, right? In the real estate industry, he's buying up Lennar, he's buying up these, basically these home builder companies, right? And so why would Warren Buffett be doing that? As I said then, I'll say again, why would he be doing that unless he believed that the real estate industry was about to get unfrozen, so to speak, right? Due to the rate cuts that are, sure to come in September and even beyond that. So, there just continues to be this building up of interest on the bullish side with Opendoor, and I think it's a great thing to see. All right, let's jump into the chart for Opendoor and take a look at what we saw last week. So wasn't the most exciting from the chart perspective compared to, what we saw, like last Friday or a week from last Friday, right? Where we had that 40% move to the upside. This past week was a bit quieter, right? But sometimes quiet is a good thing. You need breathers in these rallies to the upside. It's not just a straight line up. As I said on the midweek check-in last week, you got to take some time to let the RSI cool off. You got to take some time to, basically take a breather, collect yourself. And so I feel like that's what we saw on Opendoor last week. And honestly, what's really encouraging to me is the fact that we have not really broken down in a major way here. Yes, we had some red days last week, but as you can tell, for those on YouTube, taking a look at my chart here, we're essentially sitting in a bull flag, a bull pennant, whatever you want to call it, currently. So this is what I'm watching right now. If you're familiar with the show, I use Fibonacci retracement levels quite often. And, basically if we're using a Fibonacci retracement level from the all-time low with the 52-week high that we had the other week, as of right now, we are basically in this range of the 23% retracement level. The reason I find that so encouraging is because that is one of the most shallow retracements that you can get. The fact that we haven't broken all the way down yet to, the 50%, 61%. For those that have been tracking the show for a while, we've been covering Opendoor for over a month now. And when we had the initial run up back here on July 21st, and I had some Fibonacci retracement levels lined out there, we had retraced all the way back at that point to the 61% and even more than that, right? It was a very, very deep retracement. And so the encouraging thing to me is the fact that this time around, we are showing a very, very shallow retracement. It shows bullish momentum. It shows strength in the stock, and it's great to see. So as of right now, like I said, we're in this bull flag, and really what we're looking to do is break out of this descending level of resistance. We had a touch point of 496 on Friday, right out the gate, right at the bell, right? We tried to test out 5 and we got rejected, but we do have this ascending level of support. And so one of these is going to give. We don't know which one, right? But if history tells us anything, just by looking at the recent price action over the past, month or two, I would be more inclined to think, given the retail interest and hype around this company right now, we are going to break out to the upside. And that's not to mention the fact that if we get that CEO news that everyone's waiting on, that permanent replacement for Shrisha Radhakrishna, that is going to be massive, massive news, especially depending upon who it's going to be that gets selected, right? So if the retail community ends up getting someone that they view as an individual who can lead this company into the next phase, right? That's just going to be more bullish pressure to the upside. So I do like the fact that on Friday we managed to kind of have this indecision candle. Yes, we got pushed down as low as 420, but then the bulls pushed it back up. And as of Friday's close, we're basically testing out this 450 range. And really the next level of resistance I'm watching, again, is that 23% Fibonacci level of $4.60. And then, of course, getting above 5, that would be kind of the next level that we're looking at. So we, we're still above major moving averages. So that's great to see. All right. So if we also take a look at the volume here and the RSI, Friday's volume was actually a bit more than what we saw on Thursday. Thursday was another indecision kind of candle here. We've seen volume dissipating, and we got a breakout from that downward trend on the volume that happened on Friday. As you can see here, we had some more action. And so I would expect that to continue, especially coming out of a long weekend, right? I wouldn't be surprised to see another big volume candle form on Tuesday, especially if we are able to get some bullish momentum and push the top of this bull flag here to get the test, to get the breakout of it. Now, as far as the RSI goes right now, we are currently sitting at 64 on the daily time frame. Great to see. The RSI was overheated. We were technically in overbought territory not that long ago, sitting at 76, kind of toying around with 70 for a few days. And so the fact that we've come off a bit there on the RSI, yes, it's still, pretty high. It's above 50. But I think that we had some time to cool off on that. Gives us the opportunity to reset and have a breakout of this bull flag. That's really what I'm looking for next week. I'm going to get crazy here and give my 2 cents for what it's worth. I do believe that we break $6 at some point in this upcoming week. So that's just my 2 cents. I guess we'll see how this video ages, but that's what I'm looking at right now. One of the things I called out in the last video was, I basically said, I believe $4 is going to be a new support level. If that had broken, I was saying we'd probably retest 380, that 38% fib level. And we did manage to hold 4. So 1 for 1 on that front. I'm going to go hopefully 2 for 2, but again, I'm calling for a $6 break sometime this week. So we'll see what happens there. Let's take a brief look here at the options chain for Opendoor. If we take a look at Friday's action, surprise, surprise, another bullish day for the options chain. I've talked about on the show many times now how regardless of a red day, a boring day, a green day on Opendoor, the options chain remains bullish. Love to see it. You had over 700,000 calls transacted versus just 250,000 puts. Leaves us with a put to call ratio on Friday of 0.32, insanely bullish put to call ratio. And as far as what we got coming up on the options chain, if we take a look at the next weekly expiration, again, a shortened trading week, but September 5th, the next expiration that we have, and just take a look at some of the open interest, right? What are some levels that, traders, investors are paying attention to? As of right now, as far as open interest, the big amount is sitting at the psychological level of $5. And as far as the volume we saw on Friday for that particular strike price, we had over 64,000. I'll be interested to see if that open interest of 23,000 gets bumped up as of Tuesday when the market opens. But as of right now, it looks like the $5 level, at least in the very short term this week, is where the bulls are placing their bets. As far as the next monthly expiration, typically you see more volume on the monthly expirations versus the weeklies. So let's take a look at September 19th. And as of right now, you have a lot of volume sitting at 450 on the 450 strike. You got a fair amount at $5, and you have a ton sitting at $9, right? So when we talk about gamma squeeze potential, when you have a ton of open interest, especially with strikes that have super low deltas, right? Basically what ends up happening, if in the best case scenario we end up running up to 9, those deltas are going to expand, and market makers have to hedge for that by buying shares. Well, the more open interest, the more shares they have to buy. So 42,000, that number could continue to grow. But if we get anywhere near that, right, before September 19th, we could be looking at a potential gamma squeeze setup. So still too early to tell. And of course, these are more lottos than anything right now, given the delta of only 14. But the fact that you have such a large amount of open interest, this is definitely a strike I'm going to be paying attention to in the coming weeks to see if that open interest continues to build. So that's what we got right now on Opendoor's chart. Some of the institutional buying. We'll, of course, be paying attention to this stock in the coming weeks. This is the most captivating stock in the market right now. So we will, of course, continue to track on this. All right, let's jump into some of the major indices from last week to see where we are standing right now. First of all, I want to take a look at the S&P 500. So S&P 500 on Friday had a red day, and we are toying around with a new all-time high, which we actually set on Thursday last week. So as of Friday's close, you got the S&P 500 sitting at 6460, and really it's been impressive to see the S&P kind of recover from some of the AI scare that we had right here the other week. Some people saying that we were in an AI bubble. We recovered all of that. We hit a new all-time high. And like I've said on this show before, I fully expect the S&P to hit 7,000. Honestly, I wouldn't be surprised if it's before the end of the year. Obviously, we got holidays coming up before you know it, and we're going to have a Santa rally. Historically, that's what happens around that time of the year. And so I would expect 7,000 on the S&P 500 before the end of the year. So looking pretty good there. Let's do a quick check-in on the tech-heavy NASDAQ via the Qs. And Friday we closed at 570, technically closed below the 20-day moving average there. So tech kind of consolidating right now. We are not that far off from the all-time high on that as well, but obviously NVIDIA last week with their earnings and basically some of the revenue they got from their data centers not being what the street expected hurt that stock in the short term. And of course, that impacts the Qs, given that it is the largest company in the market. So that's what we got there. Let's do a quick check-in on IWM, the Russell 2000 ETF. We closed Friday at 235. And really, if you zoom out, the interesting thing on IWM right now, we are not that far off from the 52-week high, which was 244. That was back in November of last year, right around Thanksgiving. And you can see that ever since the tariff scare that we had in April, IWM has been recovering all those losses, and we are getting awfully close to testing a new high here. One of the things that's helping IWM right now is the fact that you have the Fed in a position to most likely begin quantitative easing, cutting rates beginning in September, and obviously small cap stocks are going to be very sensitive to rate changes because they are dependent upon them for their overall operations. So that's what we got on IWM. Let's do a quick check-in on the VIX. And the VIX right now is sitting at 15. Great to see it below 20. As I've said before on the show, when you have a VIX above 20, shows a lot of fear in the market. A VIX below 20 shows overall confidence in the market. So the VIX has come off after, that AI scare got a spike on the VIX up to 17, but it's coming back off now. And really on the VIX, folks, we are at 5-month lows. I would not be too surprised if we end up getting some type of, push to the upside, I guess, on the VIX coming soon, just because we are trading at such insanely low levels on the VIX. It would make sense to get a bounce on that at some point. You got the 52-week low on the VIX at $12, and that was back in December of last year, December 6th. to be exact. So we're only $3 off, 3 points off rather, from the 52-week low on the VIX. So again, I wouldn't be surprised if we end up getting a push on that soon, but that's what we're looking at right now. I had a couple comments on YouTube of people asking me to do a quick rundown of a couple tickers. So just want to be true to my word and cover that here real quick. First of all, I want to check out Bitmine Immersion TE, ticker symbol BMNR. This is a very interesting one. If we take a look at the 1-year chart, it was as low as $3, $3.92 to be exact. And you can see this massive explosion up to 161 in such a short amount of time. I'm sure there's a lot of bag holders sitting on this right now, just given that run up that we saw. Hopefully the listener that asked me to check this is now one of them. But as far as, some of the levels I would be watching on BMNR, we are currently trading below the 61% fib level on a daily chart. And really what I would be looking for is, first of all, a reclaim of $50. That is going to be a very massive psychological level for BMNR. A reclaim of that, and then a retest of the 61% fib level. I personally would not be touching this right now until I see some of the volume pick back up. You can see here that we've kind of had this volume descending, right, since this run up that we had on August 11th. So that's why I'd be watching there on that. I'll do a quick check-in on the options chain for it. Fairly bullish, put to call ratio 0.58. Looks like on Friday you had 165,000 calls versus 96,000 puts. So from an options volume standpoint, obviously nowhere near what we're seeing on Opendoor, but for what it's worth, it is fairly bullish. Another ticker that someone asked about here was Alt 5 Sigma Corp, ticker symbol ALTS. And these are both kind of in the crypto space, if anyone's curious to check them out. More on the tech side for sure. This chart looks a lot better in my opinion than BMNR. Over the past year, we had a low of $1.55, got as high as $10.95 back on June 5th. And you can see here clearly on the chart from these fib levels, this is based off of a 2-year chart that I set these fib levels. Basically we had a test of that 50% psychological level right here. We did manage to reclaim 38%, and now we're curling back up. So it looks very good to me. Wouldn't be surprised to see a break at 10.95 if momentum is able to continue. And the interesting thing on this one in particular, look at the insane volume uptick relative to what we've had over the past year or so. Basically, the volume really picked up on this thing after earnings came out back beginning of August, and now you got all this new interest sitting on the stock. So this is interesting. And as far as the options chain on this one, very light. Put to call ratio 0.12, but I mean, we're only talking 34,000 calls, 4,000 puts. So really not a lot going on the options chain there. I would be prioritizing shares if I was looking, if I was looking at this, but in either case, I like the chart setup for sure. And really want to see a break of this descending level of resistance that's kind of forming here. If you get a break at 10, I think it's a clear shot to a new high above 10.95. All right, so now let's move into some of the macro news from this past week and just take a look at what we could be expecting for the coming weeks as well. First of all, I want to take a look at this article from the Wall Street Journal. August market rally left Fed fears in the dust. So as economists wrung their hands in August over President Trump's escalating pressure campaign on the Federal Reserve, markets sent a different message. Let the good times roll. A Friday sell-off in AI-linked shares before traders jetted for the Labor Day weekend wasn't enough to derail stocks' monthly climb. Notching 5 of its 20 records this year in August, the S&P 500 ground 1.9% higher for the month, while the tech-heavy NASDAQ composite climbed 1.6%. The Dow Jones Industrial Average advanced by 3.2%. All of them were outpaced by the Russell 2000, where small and mid-sized companies that have borne the brunt of pain from higher interest rates suddenly look more appealing to Wall Street. So we've seen the month of August looking pretty bullish, honestly. And so that's great to see heading into September. And really what we're looking for right now is to see if we can continue on these hopes of a Fed rate cut, if we can continue on basically AI being everything that everyone's hoping it is, right? Being the future. There's some people out there who've been saying that we're basically in an AI bubble right now, similar to tech in the late 90s. If that is not true, then you're basically in a position where this rally could continue to gain steam, gain momentum. You get more money in the markets. And the interesting thing I have also heard is that you have a lot of institutions that sat on the sideline during those April lows that we had due to the tariff scares. And basically, if we get quantitative easing, we get the Fed rate cuts, they're going to be forced to join into the party and put money into the market. And so it basically puts you in a position where you have a lot of money on the sidelines that's going to need to jump in. So very interesting stuff. All right, let's take a look. Speaking of the month of August, let's take a look at the seasonality. So obviously, we got the beginning of a new month. September 1st is Monday. We got a brand new month. And really what I want to do here is just take a moment to look at Equity Clock. This is a great website just to get some insight into, hey, historically, how has the S&P 500 performed over the past 20 years in any given month. And so if we take a look at the month of September, the average return is negative 0.7%, gain frequency of 55%. If we take a look at the max return over the past 20 years, that would have been 2010 for the month of September with a gain of 8.8%. Pretty wild month there. Minimum return for September was actually not that long ago, 2022, negative 9.3%. So if you take a look at the chart here for those on YouTube, historically for the month of September, we continue this rally that we've been seeing basically to, the midpoint of the month. And then we typically have a sell-off heading into October. And then the interesting thing is that really, if we do begin to see a sell-off in the broader market mid-September, that should set up historically some buying opportunities at the beginning of October, the beginning of Q4, as we basically position for what is historically known as the Santa rally. As you can see here, October, November, December, it's up, up, and up for the S&P 500. So that's what we're looking at. So I would expect, again, historically, I would expect a bit of a continuation of the rally that we have seen in the market, especially with the nuance of this particular year, 2025, given the fact that, you got Fed rate cuts coming. I would expect to see a continuation of the overall rally that we've seen before maybe a bit of a pullback heading into October. All right, let's move on to this article from the Wall Street Journal. Mortgage refinancing starts to thaw as rates trend down. So this is an interesting piece, kind of giving more fuel to the fire for the bull case on Opendoor. This article points out homeowners with high rate mortgages are starting to get excited about refinancing. The average 30-year fixed mortgage rate dropped to a 10-month low of 6.56%. Mortgage giant Freddie Mac said Thursday the rate has inched down for 9 of the past 12 weeks, tracking expectations that the Federal Reserve will cut its own rates next month. More than 2 million homeowners could now save money by refinancing, according to ICE Mortgage Technology, up from 1.7 million at the end of July. If rates keep falling to 6%, nearly 6 million people would reduce their rate by at least 0.75 percentage points in a refinancing, a common threshold at which homeowners would save enough to justify the associated costs. It has been a frustrating wait for people who bought homes in the past few years when rates have been elevated. The 30-year mortgage rate peaked at almost 8% in the fall of 2023. A mortgage with that kind of rate can cost hundreds of dollars or more a month for a homeowner versus the sub 3% rates during the height of the pandemic. So, interesting piece here by the Wall Street Journal. And, this is something that we talked about really a couple weeks ago, right? The fact that you have mortgage refinancing starting. As this article rightly puts it, in my opinion, this is beginning to thaw the overall real estate market. This is what you want to see if you're an Opendoor investor. The fact that, real estate has kind of been stuck over the past couple of years has obviously hurt Opendoor. But the fact that you got mortgage rates slowly starting to come off right now really gives Opendoor the green light to begin looking more into buying and selling homes again. Obviously, they're trying to move into a more asset light approach to the real estate industry. But in general, this is great news for Opendoor. I think it's great timing. The fact that you have mortgage rates coming down and you have the retail community picking up interest in Opendoor. So this is definitely something to pay attention to, especially if you're an Opendoor, right? Obviously, you want to keep track with Jerome Powell and the Fed and see what happens with this month's September's rate cut. But in addition to that, find a way, very easy to do, go online, type it in, but track with overall mortgages, right? Seeing if those are continuing to come off. That's something I'm definitely paying attention to, as well as existing home sales, new home sales, right? Things like that. These are all things that are lending signs to the fact that the real estate industry is beginning to unthaw and pick back up again, which again would be excellent news for Opendoor. All right, let's move on to this piece that came out on Friday. Spirit Airlines stock craters after it files for Chapter 11 again. This according to Barron's. Several months after emerging from bankruptcy protection, discount airline Spirit Airlines says it has again filed for Chapter 11. Shares of the airline's parent company, Spirit Aviation Holdings, collapsed in after-hours trading following the announcement. Around 4:30 p.m., they were trading at 65 cents in the NYSE American Exchange, down 46%. That is massive. They were relisted there in April after exiting Chapter 11 in March. The airline warned earlier this month that it might not survive for another year without a cash infusion. It also warned in July that it was putting hundreds of pilots on unpaid leave in November. In Friday's announcement, the company said it is executing a, quote, comprehensive restructuring of the airline to position the business for long-term success. It added that it will use Chapter 11 to make needed changes. So Spirit Airlines cannot catch a break. They've been struggling massively. If we take a look at their chart, yeah, folks, it's been pretty ugly. Taking a look at a 52-week chart of Spirit Airlines for those on YouTube, and literally it's the opposite of what you want to see on a chart. Typically you want to see right to left ascending, right, or left to right ascending. You have the polar opposite here. You had the high of 13 literally almost 52 weeks ago, and now down to $1.21 as of Friday's close. And this is not even taking into account after hours. If we take a look at after hours on Spirit Airlines, massive dump, as the article said, $1.20 all the way down to about 50 cents on that. And I would venture to say, well, no, it has no options chain. I was going to say it's probably a pretty bearish options chain right now. So looks like Spirit is going to go bankrupt. I personally would not be interested in flying Spirit, knowing that they just filed for bankruptcy. It doesn't really make me feel all that great, but let me know what you think about that, if they're going to get a buyout or if they're going to go under. So that's what we got on Spirit Airlines. Now let's take a quick peek at the economic calendar for the week ahead. So for the first week of September, this is what we're looking at, folks. Obviously, we got Labor Day on Monday. Markets will be closed on Tuesday, September 2nd. We're going to get S&P Global Manufacturing PMI at 9:45 a.m. Eastern. ISM Manufacturing PMI at 10 a.m. Eastern. Those are pretty important numbers. And then Wednesday, September 3rd is a big one. We're going to get the JOLTS job openings for July, previous of 7.43 million and a forecast of 7.24 million. So a downtick in job openings. If that comes in line or is even worse, right? If we see the job market continue to soften, I would not expect, or I would expect rather, the market to rally on that, because that's just more fuel to the fire for a Fed rate cut coming in September if we see the job market continue to weaken. Thursday, September 4th, ADP non-farm employment change comes out at 8:15 a.m. Eastern. You're going to get initial jobless claims coming out at 8:30 a.m. Some more ISM data coming out at 10 a.m. Crude oil inventories at 12 p.m. for any oil traders out there that want to be paying attention to that. And then Friday, September 5th, average hourly earnings month over month for August, non-farm payrolls and employment rates. So if you're getting the picture here, a lot of data this week. coming up, not focused on inflation, but the other part of the Fed's mandate, right? They have a dual mandate for inflation and basically just job growth, right? Making sure the U.S. job market is solid. And we're going to get a ton of data on the job market front this week that you can definitely be certain that the Fed will be utilizing to make their rate decision for the month of September. So that's what we got coming out there. Now, as far as earnings for the week of September 1st, this according to Earnings Hub, you got Neo coming out before the bell on Tuesday. I know that's a pretty popular one in the retail space. So that, again, is September 2nd. Also on September 3rd, so on Wednesday after the close, you got Salesforce coming out with their earnings. And then Figma was the hot rager that came out with their IPO last month. They're going to come out with earnings after the close on Wednesday. And then Thursday after the close, you're going to get AVGO. That's a pretty big one there. Lululemon will be interesting. Good look at the consumer. But all in all, that's about it for earnings. Not a whole lot going on. Also Dollar Tree. That's another one that comes out middle of the week before the bell on Wednesday. So that's what we got there. And again, the Fed cut is coming hopefully in September. As of right now, we got a 86.4% chance of a Fed rate cut happening in September. If we take a look at the probabilities overall for, a few months out here, essentially, we're basically pricing in a 25 basis point cut for September. And then as of right now, we got about a coin flip, 48% chance in October of an additional 25 basis point cut. And keep in mind, all this can change depending upon how that jobs data looks. Again, with the JOLT number coming out this week as well. So a lot to be paying attention to this week as far as the labor market and what the Fed's going to do there. So that's what I got for this Labor Day weekend market prep video. I hope you're enjoying time with friends and family. I hope you're getting the rest you need. Again, excited for some football. We got college football that started this weekend. My team, Notre Dame's playing Miami tonight. Very excited for that. We got NFL coming up this weekend. So make sure to drop a comment. Let me know what you're paying attention to in the markets this week ahead. Make sure to share with a buddy. Make sure to subscribe if you get value from these videos. As far as the midweek check-in, I'm going to be tweaking the time I release that a little bit. 8 a.m. feels a bit too close to the market open, so I'm going to be pushing that back to 6 a.m. Eastern Standard Time. So hopefully that helps you get prepped midweek with those episodes. So again, appreciate the support. And folks, as always, remember, plan the trade and trade the plan. Have a good one.